on, everybody? Today we're going to be looking at a whole bunch of different topics like we always do in market analysis videos. First of all, we're going to be looking at the indices, technical analysis. From there, we're going to move to seasonality, how things have been playing out so far in the markets. Also, we'll be talking about GDP numbers and expectations that are going to be going on. We just finished the quarter, I believe, Thursday, and definitely predicted it to be lesser than what the Fed had initially guessed it, or not guessed, predicted it was going to be. So Tesla, we're also going to be talking about Tesla, GME, Amazon, Google, and the stock splits they had, and how investors go crazy over that shit. Um, but also want to talk about long-term perspectives on what that means for the price. The yield curves, the inversion happened recently. What's it called for the 10-year minus the 2-year? It was only 2 days, I believe, this week, so it's technically a soft inversion. But we're also going to be talking about the difference between the soft inversion and the hard inversion and what they basically mean, the implications of it, what's behind it, what does that mean? Well, like, what is that? Why are people worried about that? Unemployment, we're also going to be talking about that. Numbers came out this week as well. We're doing pretty good number wise. The only thing is that we're getting to a level where we're almost not at full employment, but basically there's not a lot more people that could get into the market to keep numbers up, if that makes sense. So growth is going to be slow in those numbers. Joe Biden proposed a 20% minimum billionaire tax, which technically happens with 100 million heirs and above, and what those long-term implications of that could be on the normal people such as yourself or myself. Also, I'm talking about oil, how Biden basically went back on his promises. It's understandable, but I just want to bring it up. He's going back on his promises that he ran on elections wise. He did do what he wanted to do, but unfortunately, due to circumstances in another part of the world, gas prices have been shooting up, and he's worried about the consumers and Americans. So he's going to be tapping into reserves as well as possibly even opening up drilling again, giving permits out again on that type of shit. So it's definitely something to be looking forward to and see what could happen. Russian ruble back to pre-war time levels. So technically, even though we are still at, or not we, but Ukraine and Russia are still at war with each other, Russia's currency is back to normal. Speaking of currencies, the last thing we'll be talking about is our currency, the U.S. dollar, with the relations to other currencies. Currently, we're at resistance. So, are we going to break up to the upside or continue down? And what that means for assets, whether you're in Bitcoin, whether you're in stocks, whether you're doing a whole bunch of different stuff, what does that mean for the markets? So, let's go and start with technical analysis. Got a few levels drawn out here. The white lines are basically my support and resistance levels, and this little area right here, for me, I wanted to draw too many different support and resistance lines in this area, so I just drew a rectangle box, like an area that, for me, that acts like a supply zone or demand zone, depending on what context it's in. Because as you can see, I mean, there's good consolidation in that area, back testing, back testing, back testing, highs, but there's also consolidation where the levels of which it closed or even wicks had also hit that, and even times it hit this and resisted it there. And yeah, so I just drew a zone rather than an actual line. So we had a crazy rally recently, basically from, what is this, the 14th, all the way up until the highs. That was about 11%, almost a 12% run up. That's pretty damn crazy in the span of 2 weeks. So definitely the market needed to cool off, which we kind of are getting at the moment. And who knows if we're going to continue lower or if this is going to be where we stop and we continue higher. Or even if we just go straight back down. Who knows? No one can really ever predict the market, but we're just going to look at different indicators and what they represent, basically. So we finally did get our pullback after a crazy monster rally. And, I'd expect a healthy area for me, in my perspective, what I'd be like to see is it to come back to this 446-ish level and hopefully get a nice bounce off of there and continue higher. But again, just a little bit of consolidation, a little bit more time because this was a really fast move. So the more breathing room time we get, the better the move we're going to get that follows that. All right, let's look at some indicators and what they mean. So this PMO, basically price momentum oscillator. I think that's the name of what it stands for. Basically, whenever the blue line's above the orange one, we're in uptrend, and whenever it's below, we're in a downtrend. If you see it go back and forth, then we're kind of chopping sideways or giving mixed signals different times. The wider the spread gets between these two, the more momentum that it has. So as you can see here, there wasn't really much room, much space. We couldn't really tell where it's going. It expanded here and now it's on the way down. We should definitely gap down. But here we're seeing bigger space than we did back over there. And as you can see, there's more of a consistent move, a straight move up to the upside. Well, right now we're kind of curling over at the top. It's taking into account these past couple of days that we had that were red pullback days. So we could either see it maybe possibly touch and then re-widen, or we could see it completely turn over and we actually get a pullback down to the downside. We'll see what ends up happening with that. So let's look at the other indicators that I also look at. EMAs. Again, they're just averages, different ones. So we got the 20, 50, 100, and 200. And since it's an EMA, it's exponential. So basically, it gives more weight to more recent price action than it does the past price action. It's kind of hard to see. So let me go ahead and remove these drawings real quick. Make it a lot more easier to see. So we got this whole bunch of basically they bounce off these a lot, pretty frequently. So coming back to this area again, this 446-ish area, have a lot of these EMAs down here, so it'd be a nice area to bounce off of. One that scalpers or momentum, like when you do following momentum trends like this uptrend, a lot of people they do use another oscillator, another EMA. Let me go ahead and find it. They use the 9 EMA, and usually if it could hold the 9 EMA, then we're good. And as you can see, it held it there. It also held it here. Even though it went wick down below, we had to close above the 9 EMA. So technically, people would still expect us to be in an uptrend. And sometimes they even look at the 5-day EMA. So let's see what that looks like. Technically, we're below that one. So we'll see what ends up happening. Another one is anchored VWAP with deviations. So the way I look at this one is that you anchor it down to the highest point with in time, or the recent swing line or lower swing high. So the high for the year was up here. So this yellow line right here is anchor VWAP. Many institutions trade based off of this line. They maybe plan it different places. I just put it there just because it makes sense. This is the highest point for me. Technically, you could put it here. You could have put it here, or you even could have put it at the low right here, or one of these lows before we had this move to the upside to figure out what type of deviation we're hitting at the moment. But I just went ahead and used not the first, it's actually the 4th of January this year. And we kind of use this as a support and resistance as well. As you can see, we're definitely oversold with anticipation of the rate hikes as well as pricing in the war situation with Ukraine and Russia. So all that has definitely affected the markets negatively. But we finally got this rally up, and a really fast rally too. We're over here at the negative 1.5 deviation, even the second deviation, and we came all the way up until basically the second deviation. I mean, no, that's the 1.5. Sorry, excuse me, 1.5, and we actually came back down and bounced off of this intraday on the half deviation to the upside. So we'll see whether we come back down to this the mean. You normally it does because that's like acts like a magnet of some sort, but so it's significantly lower than the 446 level. So we'll see. We'll see if that ends up playing out. I mean, it does seem like it's a good level since there was a previous gap there as well as it acts as support and resistance as well. So let's look at some other indicators. I'm going to keep this one because that one I have to program it. Not program it, but when I close it, I have to anchor it down to a certain date again. So I'm going to leave that closed real quick. Another one was the Evan Cabral strategy. This one is, I'll go ahead and throw something else on there too. Go ahead and hide this one real quick. Okay, so this one, Bollinger Bands, deviations. Once again, let me go ahead and make this little black line in the middle a different color. Oops. It sucks because I have to redo this. This is someone else's indicator that I'm using. I can't customize it and save it that way. I don't think so. But this is the 20 EMA. And then the Bollinger Bands are deviations of the EMA. So this is the second is the red one, and the third is the blue one. So basically, I forget the statistics. I think it's like 97 or 91 or something like that of price action. So these candles, the time the candles spins outside of that second one, the red one, is like 91 or 97% of the time it'll be within. The blue one is 99 or 97. I forgot which one it is. Apologize for not having my statistics on point. Basically, so if you see it outside of this range be a good buying point, a good buying point. And if you see it outside of that range in the top, it's usually a good sales time. And right here, give a signal to sell the strategy itself. So, and also the contraction basically means there hasn't been a significant move to the upside or downside. It's just kind of going back and forth between a certain range. But whenever you see it break outside of that range and you see these lines start to curl open, it's a good indication that something is currently happening. The squeeze is what's gonna tell you that something's going to happen here soon, whether it be to the upside or the downside. It's not telling you which one. You just kind of have to and make an educated guess based off of what the price is doing. So right there, we saw it hit the overextended area. Definitely coming back. Will it come all the way back down here? I don't think so personally, but anything could happen. I actually kind of hope it does. Not gonna lie, be a better buying opportunity. Volume profile. This one, I think I discussed in the last video, but the y-axis is the price. The x-axis, rather than time, is the volume of shares traded. So basically, the bigger this little shelf or these little peaks are, that means the more volume or more shares that were traded within that range, which also coincides usually with support and resistance. So as you can see right here, it had a tough time trying to get over this point right here because of this big ass peak that it had right there. And although it did wick down here, it wasn't enough to close down below it because it was too significant of a level. And this yellow line is the VPOC, volume point of control, which is the most shares traded out of, like in total on the chart. I believe this is over the past 200 or 100 days. I forgot which one it is. But as you can see, we have hella more resistance to the downside than we do have resistance to the upside. So if we were to make a move one way or the other, strictly based off of this, it looks like this would be the easiest path, the least path of resistance. But news-driven market, so basically anything can happen. Again, I like this the 446 ish area right here. That'd be a nice sweet point in order to pick some shares and different stuff up for long positions. And that's basically what the indicators. So I'm gonna go ahead and switch over to the QQQ. It's basically the exact same thing. Let me go ahead and turn off the indicators. These blue lines represent the weekly support and resistance, and the white ones are the daily support and resistance. And the weeklies do coincide with the daily support and resistance. So technically, all these could be white, but only the blues are going to be the blue ones. We bounced off of a significant weekly level. I actually charted this, what's it called? I think Wednesday. It actually held up for Friday, so that's pretty lit. It's nice whenever the things that you draw and the things you practice actually turn out the way they're not necessarily supposed to, but the way you plan for them to. So that's cool. Again, I'd like this, like it to come a little bit more down for a long position. Just a little more breathing room, a little more time to cool off because again, this was a massive ass run up. Again, if we measure it from the bottom to the top, it's about a 17% move. Oh my god, that's insane. But yeah, I didn't realize it was that much. God damn. Okay. But a pullback to the 350-ish area, that'd be great. Psychological level 350. You see this is hella support and resistance for different time periods, as well as if you look back here, times in which it bounced off of. So that'd be definitely a good area in order to cool off for. Oh, excuse me. Sorry, like I mentioned before, I woke up pretty early today. So as you can see, that literally coincided with the VPOC, so that's why it struggled in order to break through that shit. But if we were to come back down, as you can see, this is where the tough areas ends, so we could get a nice little bounce off of here and come to the upside. But again, it's going to struggle in order to make its way through all this right here. So the next indicator we're going to look at is the Evan Cabral strategy. Again, it hit that second deviation, it bounced off of it. It's actually the 200 EMA is acting as support at the moment. That's actually pretty cool. That one actually coincided with that as well. And then anchor VWAP. Again, standard deviations are acting as support and resistance. We came all the way from down from -2, even the -2.5 whenever the war was declared, all the way to the 1. We're currently at the half. So if we come back to the mean, it'll coincide with the support level we're talking about, and also the indicators as well. We'll go ahead and close this. Close this. Again, it's basically the same thing as the other one with the rest of the stuff. The EMAs as well, they're all kind of curling up. If the area would coincide here would be nice, and so on and so forth. So that's that for that. Go and look at some other tickers. Look at Apple. Apple had a massive time. I think this what one of the posts that I've seen is that it had the most consecutive green days in since 2003. So this is definitely a historic day. 20%. God damn, bro. It's just fucking wild. Um, I had a kind of a trend line right there, kind of like that it had broken out of. Uh, I just draw it like that. It's really massive. Again, just looking for a cool off phase here. Expected, not expected, but I'd like it to come back down to this area right here. This line right here, the 168 level, 68-ish level, I should say. This day it had dropped because it had some news about its supplier of chips that they're no longer going to be continue to be Apple's supplier. But you buy the news. I mean, you buy the rumor, you sell the news. So if you would have known in advance, you would have bought. I mean, so bought some puts. But as soon as the news does happen, usually it trends the opposite way. Same thing with the Fed that we'll be talking about soon, and same thing with like Dogecoin with Elon Musk, and same thing with a whole bunch of other things. You buy the rumor, you sell the news. Uh, AMD had some massive sell-off recently. Basically, what banks? So banks have investing divisions within the banks, and what they do is they do price targets for different companies and different tickers and stuff like that. AMD was one of the ones that had a downgrade. I forgot who downgraded them. I don't know if it was JP Morgan or if it was man, I don't remember who it was. But basically, they had announced that they had downgraded them. I think their price target was like 150 or 160 or something like that, and they brought it down to like 130 or 120. So technically, it's still above what the price is right now. But since the bank's saying that they don't have as much faith in AMD, it obviously fell. But this kind of coincides with the trend line. I mean, trend lines are basically, in my opinion, aren't the best, just because the plain fact that you could kind of draw them lots of different ways, and there could be lots of different things you could say. That'd probably be a better trend line right there, in my opinion, because it kind of takes the highs of like a whole bunch of different days. High, high, high-ish, high, 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 lows, and then lows again. But again, you could draw it a whole bunch of different ways, and technically you could be right. So this could be a breakout retest in order to go long. Only time will tell. But I went ahead and picked some up just because I like AMD long term, so it'd be something good. Um, we're not going to look at Berkshire. I had Amazon in here, didn't I? Yeah. Same thing with this one. You have these massive ass days. This little cool off phase has been nice for these companies. Pull back down to this 31.78 level would be nice, just because it acted a hell of support in the past, as well as the middle of this whole chopping action. Nvidia has definitely been outperforming AMD. Again, this whole downward movement breakout whenever we had that massive run up. Nice little pullback here, a little cool off, and hopefully we'll be able to continue up. And usually, whenever news happens for AMD, Nvidia will be affected. And usually, when Nvidia has news, it'll affect AMD. There'll be earnings reports, whether it be chip shortages, whether it be a whole bunch of different stuff. So, whenever AMD got downgraded, I imagine it did have some type of an effect on Nvidia. Another one is Google. Damn, I thought I had this one charted. Oh, that's Home Depot. No wonder. Again, massive ass run up, cool off phase. I didn't have this one plotted as a support and resistance line, but that does look like a good area of support and resistance as well. Again, would like it to pull back a little bit more just because, you know, there's some better support lines in which it could bounce off of, in my opinion. But I mean, that's me. Market's gonna do what it wants to do. Same thing what I did with SPY. This little region right here, for my opinion, would be nice to be able to have Microsoft as a supply zone or demand zone. As you can see, the tips of this acted as resistance, tips of this acted as support. Chop in this area, resistance, currently resistance. So that's why I had went ahead and drew it like that. But yeah, that one's that. And that'll conclude the technical analysis at the moment. Next thing we'll be looking at is seasonality. Seasonality is a thing basically whenever certain times of the year stocks act a certain way. It's not 100%, it's not all the time, but this is basically taking an average of the performance of the SPY, percent gains over the course of the year based off the season. So, as you can see, January leading into February is normally a bearish time, which is something that we did experience. If you look at SPY, January starts right here, this area. February starts right here and ends actually towards this area. So this drop that we had from all the way up here all the way down here was January to February. March, you had this massive ass rise up from this fall, and then you have a cool off areas in April, going positive, heading into May. Once May comes, typically bearish month, and what follows also is bearish typically. So this little pullback that we could be getting could be a nice little area in order to continue this rally that we should be having into April, and from there we might cool off heading into May and June, July. You can look more into this because this is actually pretty interesting. I forgot who it was, but they were talking about basically how if you would play seasonality, like if you were to get in end of February, end of April, you got in that time, then got out during those bad months, then got back in after the drop in September, and played it up until November. You'd have more gains than the actual S&P 500 itself, which is pretty interesting. So again, it kind of plays into different strategies you could take and different things you could do. GDP numbers. GDP expectations have fallen from what the Fed had basically predicted. You can read right here off the screen for yourself if you want to look at that. But it's definitely showing how there's more implications, more stuff that the Fed didn't take into account that are affecting the markets now. And since they're tightening policy right now, whether it be reducing their balance sheet, whether it be actually selling, no, whether they stop buying stuff for their balance sheet, whether it be treasury, uh, bonds, or mortgage-backed securities. They stopped buying stuff in March, and now they're planning on selling. I don't think in May. It was 2 months. In May is whenever they're gonna start selling. So there's liquidity in the market. They're gonna stop pumping money in there. And not only that, but they're gonna be taking away liquidity since they're reducing their positions that they currently have. This doesn't play good into what's already happening right now with the GDP expected to go down. Tesla, speaking of stock split, if you look at tickers like Tesla, this is what a stock split announcement does. That's a gap, man. That's a gap right there. So if you go from the close of the day, oh, sorry guys. You go from the close of the day to the open of the next day. That's a 5% move overnight. There's nothing you can do to stop that. That's crazy. Yeah, that's what a stock split does. Basically, people get happy for it because what's going to end up happening, the share price is going to get lower, so it's going to be more affordable for retail investors or people who don't have large amounts of money. Not only that, but Tesla's paying out our dividends, like kind of like how Apple does. Technically they're growth stocks. They have more stuff. They're using more of their money for research and investment or acquisitions. But at the end of the day, like they have enough money on hand to where they can pay out dividends, which is pretty badass. So that's something that happens. Like I mentioned before, we were talking about GameStop, GME. The meme stonks are starting to have momentum. They announced a stock split. I forgot when it was. I forgot what day it was. I think it was this day. Yeah. It was this day. Oh my God, this thing moved. So this was the close of the day. This is the open of the next day. Because remember, the red candle is the open is on top, and uh, green candle is the opens on the bottom. So basically from the close of the day to the open of the next day, it was about a 13% move. But the thing was, is in aftermarket, when they announced that they're gonna have a stock split, I think it actually reached 201 as a peak. That's 20% overnight. That's insane. And what do? You buy the rumor, and normally nobody could trade options aftermarket. So there's not really gonna be, if anything, it's gonna go up overnight, even as a pre-market session. But once you open the next day, usually people sell the news we talked about earlier. That's crazy though. 20% move overnight. That's insane. And technically, it has a breakout retest of a trend line that it had. So we'll see what happens here. We'll see if we have like another meme stunk rally, like how we did in COVID. Like these numbers are insane. Like if you look at this, like there's like no volume at all previously before that. You open here, boom, insane volume. And we'll see what type of percent gains you would have got if you would have got into this whole hype craze. I don't know if anybody, not everybody knows about this. So January 13th, all the way up until this day, which is what, January 28th. Over the course of, what is that? It's about 2 weeks. If you would have bought at the bottom and sold at the top, you would have, what is that? 23 times your money. That's fucking insane. That's some crypto type shit. Yeah, that's crazy, man. You know, AMC actually has some pretty crazy rally too, but that's not necessarily what we're talking about. We're talking about stock splits. So Google announced their stock split that they're going to be having as well, and that's whenever they jumped from here all the way up to there. They also had some other stuff about their earnings that was really good, so that's why they had such a big move. But again, you buy the rumor, you sell the news, because what happened after that? Boom, they died. And whenever the stock split actually does happen, what ends up happening is that usually it'll take off like crazy because it's going to be a whole bunch of new investors who actually can invest in the company. But shortly after that, it dies. Same thing with like IPOs and I was about to say IPAs, IPOs, and I forgot the other one is. Basically, small companies. So what happened with Rivian? They announced that they were finally going to start being able to be tradable or being able to be invested. What happened? Shot up, but shortly after, fell. What I do? Continue to die just because it's overvalued as a company. So that's something else to keep in mind if you're looking into IPOs. And I forgot the other word for the other one is. But yeah. So we look at stock splits, yield inversion. Basically, there's a whole bunch of different bonds out there in the market. There's 30 year, there's a 10-year, 5-year, 2-year, 1 year, 3 month. I'm pretty sure there's more, but those are the ones that I've heard about. And basically, the longer term yields, when the longer term yield minus the shorter term yield inverts, which basically means the shorter term yield gives you more of a return on your money if you're getting a bond than the longer term. That's indicating that there's going to be more riskier events in the short term than there is in the long term. It's basically what that's letting you know, because the reason why a 10-year yield should pay more than a shorter term yield is because more shit could go wrong within the 10-year time frame that there can the 2-year time frame. So if the 2 years is paying more than the 10-year, then basically it's pricing in the fact that something really bad could happen in the next 2 years versus the next 10 years. Next 10 years you'll be fine. The bad part that you're going to be going through is within the 2 years. So that's basically what, from my understanding of what it's letting you know, basically. I also heard something about when it comes to banks being able to lend money versus them making money off of people. That makes sense. And also, interest rates are based off of this as well. It's not based off of the interest rate that the Fed speaks of. The Fed speaks of interest rates that affects this, which this affects interest rates of homes and long-term securities or assets, I should say. I don't know if securities is the right word. Yeah, there's a whole bunch of stuff you can look into when it comes to the yield curve. Honestly, I haven't done that major of a look and breakdown into it. But basically, the 10-year minus the 2 years predicted every single recession since the late 1970s. There's been a false signal, I think it was in 1960s, that I was listening to on the podcast that I recommended. Uh, if you haven't looked at that yet, that's a pretty good podcast. And something else that one of the guys mentioned before was that if you look at the unemployment numbers, if you've seen a rise in the unemployment numbers of greater than 20, I think it was 20% over a 3 month smooth moving average period, then you know you're in a recession. But the thing is that tells you what you already know. That makes sense. This is in advance. Like it's letting you know in advance what's going to happen. And as you can see, it doesn't let you know right away. So you got 17 months before the recession, 9 months before recession, 19 months before recession, 13 months, 23 months. And the COVID, there was actually a yield inversion in 2019 that hinted that there was going to be problems in the future. It didn't know that there was going to be COVID. COVID just kind of, what is the word, exemplified the effects of the recession. It wasn't necessarily the reason why there was supposed to be a recession. There was problems that this was already taken into account. So again, you could look into it. Up to y'all. So like right now, if like the nuclear war was to happen with Russia and Ukraine, it didn't predict that there was going to be nuclear war, but the fact that there is nuclear war with Russia would emphasize the effects of the yield curve inverting. Unemployment numbers, like I talked about, they were released this week. If you want to look into them further, you can if you want to. Things to look out for, though, is that we've recently been having really high increases of employment numbers. And the thing is that there's not, since we have such a low number of unemployment, so as you can see on this chart, we're basically back to pre-pandemic numbers. And we came down, dropping down fast. The thing is that we can't keep up with that speed because there's not that many people who are actually looking for jobs and who can actually acquire them or fill the spots. So basically, when we start running out of people, we are lifting restrictions on immigration. People who are graduating from college who can now enter the workforce since they don't have to worry about just like to their school or whatever. These are supply of people, and also not only that, but people who had actually retired uh, are actually starting to come back into the workforce. Not all of them, but there's a noticeable number of people that are coming back. So those people that we could be seeing coming back into the labor force to help keep the numbers up, but then eventually you're going to reach a point where you're too saturated and there's nobody else to fill those spots. The growth is going to slow down. And what happens at that point? Usually we start falling the other way, and unemployment starts to rise rather than go the other way. So it's something to look at, something to be aware of, basically. This kind of falls in line with the whole yield curve inverting situation. Just because we have low unemployment doesn't mean you can't stay right there. But if we were to have if we were to have a recession, then we could fall back to the cyclical cycle of going up and down with unemployment rates. So another thing to talk about is Joe Biden with this billionaire tax. In theory, it's not that bad. The rich get taxed for unrealized gains. They help support different programs that the government is trying to implement to help out those who don't have as much money. But the thing is that there's two problems that I see with this. One, the government doesn't like giving back power. So if the government takes power, whether it be to do something like the U.S. Supreme Court, like if they use past rulings in order to back up what they're doing now. And normally they don't like going back on those rulings. They don't like going back and changing things. Well, even with segregation, whenever there was problems that are being brought up, I forgot, I think it was Brown versus the Board of Education. I think it was that one was the bad one or that one was the good one. I don't remember, to be honest. I'm not really good with my history, but which is really bad because I'm supposed to be woke. Sorry, I'm probably getting canceled by that comment. But basically, like the government doesn't want to give up its power. So if it was to take this step and this was to get passed, that creates problems because in the future they can use that ruling or this tax, basically saying, well, we did it for them. Well, who can we do it for next? And that's where it comes to the other problem. Eventually taxes like this might trickle down to the retail investors, such as yourself and I. You know, like originally, I think it was income tax was only meant for the rich, but what ended up happening? The rich aren't paying that much in income tax now, but who's getting fucked over? Us, the normal people, the plebes of the world, if you will. So that's basically something that could happen from this. Basically, it's meant to be targeting the wealthy, but what happens whenever they find a loophole? The rest of everybody else gets fucked over once they start implementing it on everybody else. And this doesn't even cover that much of the debt that the U.S. has. Like we're in the trillions amount of debt, and over the course of 10 years, they're expected to get $360 billion worth of money from these people. That versus the amount of debt we have, like that's only going to create a dent in the problem. it's not really gonna help us at all. So in my opinion, it's more of a power move by the government to help control the people. Conspiracy theory, let's go. Another thing is the oil drilling, like Russia, with the whole Russia Ukraine situation has driven up prices of oil. It's hurting Europe more than it is us because they're not armed. Europe's main importer of oil is Russia. Ours isn't, but it's definitely creating problems for us at the pump. So Biden plans to do is to tap into reserves here in the U.S., which is cool and all. It's gonna help lower prices over a period of time, not right away. But what happens whenever those reserves run out? What is he going to end up doing? We're going to end up drilling our own oil once again. And so he's going to start issuing permits. And what did he do whenever he got elected? Or what is one of the things he ran on whenever he was getting elected? It was to stop drilling here in the U.S. and to stop making us, not letting us use the reserves basically that we had. So basically, going back on the promises that he ran on, it's understandable because I mean, obviously, you want to help out the U.S. You don't want us to suffer, so it makes sense. The thing that sucks though is that by doing what he did, the U.S.'s infrastructure wasn't ready to go 100% committed on renewable energy. He's talking about something. The plan and what he did basically when we first got elected by cutting off our reserves, our oil supply, all that shit. Like that's something that should have happened way later down the road once we had the infrastructure of renewable energy to replace that. We currently don't have that, so he basically kind of fucked us, and now he's being forced to go back on his promise, which is, yeah, it's just like a neck, bro. Let me smack you. One of the last things I want to talk about is the ruble versus the U.S. dollar. If you look back, let me do 1 year. So as you can see, pre-war time, we're like at 83, 84. We shot up all the way to 139 one day, and eventually come back down to 85. So we're back to pre-war time, pre-war time numbers. Yeah, sorry, I was trying to make sure I said that right. So pre-war time numbers. We're good. I don't want to say we're good now, but like Russia's basically good now, despite all the sanctions that were placed on them that were put there to destroy them and to fuck them over. They're not really having that big of an effect anymore with respect to their currency. I'm not talking about everything, just with respect to the currency. And again, speaking of currencies, what a better thing to look at than the US dollar and its performance. Currently it's at resistance of this trend line, to which has served in the past as well as resistance. And the key thing to think about this is, what is the US dollar? If it gains strength, is that good for us or is it bad for us? For consumers, it's good because that means you have more buying power, whether it be at the grocery store, whether it be oil, whether it be like imports. Our dollar, our US dollar has more worth. The day to day type of transactions, you might not see a difference, but over time, if the value of our currency goes up over time, we'll be able to create more competitive prices because of imports. They're getting cheaper, whether it be the price of the goods goes down. So especially with this high inflation that we're currently experiencing, that'd be something good to see. But what happens if it falls? That's good for assets. So for us as investors, that's something pretty damn good. So we look at something like, actually, let's look at Bitcoin because I feel like this is a really good one to measure things based off of. So let's look at the weekly chart. That's from the last video. So let's look at what happened whenever the US dollar has risen and whenever it has fallen. Let me put these charts side to side, actually, side by side. Such an ugly view. I don't know if you can hear it, but I'm chewing grapes right now. So if we look at basically the pandemic and how it affected US dollar, so what is it, March 2020-ish area time. So from March all the way until, what is this, March of the next year. What happened to Bitcoin? It was all the way down here. Valuation back to next March. Damn, went up. Now, whenever the US dollar began to gain strength in March of 2021 and has risen since then, what has happened? It's basically fallen. It had some turn up Just know that the US dollar doesn't only affect that. Those are the factors that go into it, but it also happen. It played a role in whether if it going down. And you can even go back in time with this thing right here. You look back, look at this on a logarithmic scale. Scale. Sorry. We even see this even happened in times whenever the market was an uptrend versus downtrend. So if we look over here, February of 2015, February of 2015, what ended up happening? We were in an uptrend. When we were in an uptrend in January 2015, we weren't experiencing that much stuff. If anything, we're kind of going down. Actually, let's look at the highs right here. 2013. 2013, heading into 2015. We had this up cycle basically. We fell up cycle from 20, let's say 20, late 2015, all the way up into 2017. What happened? Late 2015, 2017, 2015, 2015, 2015. Okay, 2015 all the way up to 2017, we had very little, if any, increase in the U.S. dollar's performance. And what coincided with that? We went up. After the 2017 fall, 2017 into 2018, we've been hit our bear market. 2017 into 2018. Into 2017. End of 2017 is about this time. 2018. What happened? We were on the rise. So basically, when the strength of the US dollar increases, assets usually fall. If everything else was to stay the same, if the US, the US policy of economics, trade around the world, everything, if everything was to stay the exact same, if the strength of the dollar goes up, the value of assets would go down. Like Bitcoin would go down because the strength, like when you're exchanging your US dollar for Bitcoin, your your the amount of Bitcoin you could buy with the dollar would be more, so the value would be less. And then the opposite is true if it was the US dollar was to go down, since you can't buy as much with the amount of dollar amounts you have, the higher the price it is. That's why it goes up. But there's a whole bunch of other stuff that goes into play into effect as well. Because like when this drop right here, it wasn't just because of the U.S. dollar; it was because of Tesla stopped accepting Bitcoin as currency. China banned mining for like the 30 millionth time already. It's done it 7 times already, yet it still hit the headline and made big news. Makes no sense. Uh, there's something else that happened around that time period when we were initially dropped, but yeah, and Bitcoin and the normal markets are kind of connected. So if the QQ and SPY are going down, then more than likely Bitcoin's gonna be going down as well. And if the SPY and QQ is going up, then Bitcoin could go up or it could go down, just depending on what's going on with cryptocurrencies at the moment. But yeah, that's basically the analysis for today. I talked a lot already, so I'll go ahead and probably cut the video right here. I appreciate you if you did watch this far. If you have any questions, definitely hit me up. And but yeah, we're gonna call it that. Hopefully, get some good points and good things for people to be able to look up on their own if they have any more questions or anything they want to look into. Yield curve is definitely something that you should be watching, as well as the Fed's policy with respect to that. Just because they're walking a tightrope right now. They're stuck in between not increasing rates because they want to prevent scaring the markets into a recession, and they can't not increase them because inflation's getting away from them right now. It's running away, and if it goes too far, then we're all going to go into a recession anyways because of the high inflation. So basically, they had to act perfectly. And if they screw up either way, whether they're too slow or they're too fast, recession. So they're walking a really tight rope. So we'll see what they're doing. More than likely a 50-point rate hike this next meeting. That's being priced in at the moment. I think it's like a 70% chance for that happening. And usually, when they have a high percentage like that, the Fed doesn't necessarily do the opposite just because they don't want to scare the markets. So we'll see what ends up happening, guys. Again, appreciate you if you did watch this far. And yeah, definitely